Craig here with a market update. Okay, so let's start with equity markets. So global equity markets have had a fantastic year, a phenomenal year. It's been real bull market stuff for equity markets, but global equity markets can thank US equity markets for this bull market, because literally it has been the US equities, the S&P, and the Nasdaq, which have led and supported global equity markets higher. And specifically, it has been the big US tech companies, the Magnificent Seven, which have really been the biggest driver of this equity strength. And that's been on the back of AI, artificial intelligence. So the market has aggressively bought AI and AI names this year. Okay, so I would suggest that AI is something that certainly is not going away anytime soon. So the market will continue, probably for the next couple of years, buy AI, and certainly will continue to support the market. So now looking ahead, we're getting towards the end of the year. We've just got a few weeks left before the end of the year, and then we start a new year, 2025. So certainly the market, everyone's asking the question, how are we going to end the next few weeks, and what does 2025 look like? Especially after S&P and Nasdaq currently are up almost 30% for the year. Okay, so look, in the short term, equity markets certainly do have things to look forward to. The first one that equity markets have to look forward to is the Trump presidency. So look, Trump has been seen as very pro-business, very pro-US, and a lot of his policies are seen to be giving when he starts the US economy a sugar rush, a short-term economic boom. So certainly the sentiment towards the Trump presidency is very, very positive. And Trump himself, in his first term, when he was president, every time the US equity market made a new record high, Trump was proud of it and he tweeted about it. So certainly Trump, he's going to be doing everything possible to make sure that equity markets, remain in this bull market. So that's the first thing, and it's obviously a big reason why equities will continue into starting the year when Trump is inaugurated on the 20th of January in a positive manner. But before you even get to the end of the year, we also have obviously Christmas, and that has always seasonally been a very positive time for equities, the Santa Claus rally. So in the next couple of weeks before we get into Christmas, just seasonally equities do well anyway. So the short term, another positive for obviously global equity markets. That's not just US, that's globally. And then the other thing that US and equity markets in general have is, look, the Fed is still cutting rates. So we've seen the Federal Reserve already cut rates twice this year. So 75 basis points so far, taking the Fed's funds rate to 4.5%. Now on the 18th of December, the Fed is seen to cut rates again. We're looking, markets priced in another 25 basis points. To take the Fed's funds rate down to 4.25%. And then next year, the market is looking for the Fed to continue. Maybe obviously cut less aggressively, and yes, they may pause at some stage, but markets pricing in at least another 25 basis points cuts next year to take the Fed's funds rate potentially down to around about 3.75%. Equity markets love lower rates, and they're certainly getting that at the moment. So that is something that will keep equity markets buoyant. And certainly, we're going well away from, the higher for longer, regime that we've been in, where, the Fed had, the Fed's funds rate above 5%. So certainly equity markets have something to cheer about in the rate cuts, and then we're also seeing not only the Fed, obviously, a global central bank easing. Okay, so, but also a lot of the Wall Street banks and analysts now are coming out with 2015 forecasts. And for equity markets, all the analysts at the moment are still very, very bullish. So for the S&P, for example, the sort of targets they're looking at, S&P is currently trading just below 6,100. And the analysts are looking for targets for 2015 towards 6,500 and up towards 7,000 for the more aggressive targets. So certainly, the analysts are seeing that there's at least 10% or 15% more equity upside for US equities next year. So look, wish you well this week trading, and we'll check back in soon.